Good morning, good morning, good afternoon, everybody. This is Mark, and we're back here for the daily recap. Going to be a little brief because I don't really have a whole lot of a voice. But this market, again, intraday, we tested highs, all-time highs, on at least the spiders and the S&Ps, and we didn't close quite to the strength maybe that you wanted. But at the same time, I think a little digestion. It's going to be a little bit resistance around the 1600 level on the S&Ps. We'll see how long that lasts. I think rotation is going to continue to happen. I think technology actually will probably play the catch-up. We saw it beginning a little bit. Apple's obviously a big part of the Qs and of the NASDAQ, and it showed its face today. And even Friday, I was not here, but it was the first time, just from a technical point of view, so you all see what's happening. It was the first time in a while it was closing even above its 8-day, but it did close right at its 21-day, and then it gapped up and went, and now it's actually closed at its right at its 50-day, a little bit, hit the 50-day and actually sold off a little bit. So I would expect a little more digestion now over the next few days for it to actually probably regain some strength and go higher. But I think minimum 2-3 days, possibly a little longer, for it to digest and get some more momentum. It seems like it's a different stock, and if you actually look at the weekly chart, so you can just see. It did hit the 200. Sorry, guys. It hit the 200-day on the weekly, and then bounced back, and I think that's a good sign. It's now again over the 8-day, which it really has not been above for any sort of period of time. So for me, it's certainly on the radar, but it did make a nice 3-day move. I think you could take some off if you didn't already. Reduce some risk. We'll see what happens. Other stocks that were in play, obviously Amazon. People have been looking at from a high beta point of view. It's hovering still right here, I know, below 250, possibly psychological. It's right at the 200-day. If it breaks below here, you obviously have some decent space, 245, but then you could probably even get to 230. So keep that on the radar. From a shorting candidate, we'll have to see how that plays out. Other stocks that are looking okay. I still think the banks are still showing good strength. Morgan Stanley had a decent day today. AIG trying to recover. I think earnings are this week or next week, or very shortly. They're still the leadership, and we're still seeing it. I said that a lot of the home builders will eventually should get to new highs when they obviously pulled back. It's just how they get there is not the easiest way from an individual trading perspective. But XHB, the ETF, at new highs as of Friday, just about, and hit it today. Didn't close right at highs, but that's okay. They still look good individually. You have Rylan, Len, some of these PHM at highs. Toll still lagging a little bit, but trying to play catch up. So it's a matter of hit or miss on which ones you want to play and where you want to be. Biotechs, Biogen still looks good, but then CELG is getting a little possibly toppy. So I think you got to be a little bit more cautious on the Biotechs. AMGN, we know, came out with earnings last week. Might give you an indication, and it certainly needs more time. Whether it's a failure that's going to happen to the downside, and we're going to try to possibly touch the 50-day. Not so sure yet, but keep it on the radar, and that will obviously dictate some of the other Biotechs across the board from a trading perspective. I missed the open this morning, so I think there's certain opportunities I certainly missed. From a trading perspective, gold to me still gapping higher, still holding. It's gapped up every day almost since that implosion. And at this point, I do think the 21-day is did fill the gap the other day and came down. I actually think you should see some more downward pressure somewhere, but it's not really doing it. Obviously, I've been trying to short either the gap ups or these type of moves. It's been very weird trading. But if it gets above its 21-day, it obviously certainly can go a little higher. Very strange pattern across the board. But from a technical point of view, that's what you have to look at. Right now it's resistance, but it could become support at some point in time. After this type of move, I would be taking risk off if I was long, but at the same time, you never know. It feels like it should head down. It's just not, certainly in the time frame that I think people are looking at it. What else? We have Facebook. We have LinkedIn this week. There's a number of earnings this week. LinkedIn to me still looks great, hovering at the top end of its trading range. It seems like a 200 print in the cards as long as earnings are good. NFLX. I like these stocks that are right now basing at, top end in the range. Give it anywhere from 3 to 9 days using some Fibonacci approach. And, at some point let some of the moving averages play catch up, and you're going to have some, follow through to the upside. And NFLX every time around 210 to 212, it seems like it's buyable. 217 to 220 seems like, right now that's a little resistance. Play those ranges accordingly. They're giving you some, some looks, and you got to try to take advantage of it. And that's where we're at. I think some of the oil stocks I saw, trying to gain some composure. Some of the ag stocks trying to gain some composure. Pot, first time over 200-day in a while. Maybe that, an MOS seemed like right now, and MON seemed like the best in breed. But I'm still looking at the AGUs and the CFs, which not as pretty a chart, but I think they play catch up at some point in time if the ags can actually hold up here across the board. Nothing's changed. I think rotation at some point is really going to, come into play, and I think tech will get strong. But this is also the time of year that if you're going to get a sell-off, it happens within the next 2 weeks, at least from a calendar point of view. So I think just be cautious, be smart. But technically right now things look very healthy, and the rotation's on, and the rotation continues to be on. And you just got to, as I always say, the trend is your friend. Yes, you can try to fight it, but it's a much harder way to make a living across the board. If I had more of a voice, I'd probably do a little bit more talking, but right now, hang in there. I think, we have some earnings this week. I think it's going to dictate a little bit more of the move. And some of these moves that I'm seeing, Microsoft and some of these big cap stocks are pretty amazing and impressive. I haven't seen it in years. So stay tuned to see if they can keep up. Hopefully you had a good day today, and I'll see you all tomorrow.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.